In this video, I will show you the fastest way to build a stock portfolio for 2025. We will use a screening tool, we will use some valuation metrics, and I will show you some actionable tips if you want to build a stock portfolio for 2025. We will mainly use the website called FinChat here. I have a link in the description below in case you want to discount. And let's start. In case you are new to this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% annually. And the goal with this channel is to help you invest like the best investors in the world. We will learn from the best. And if you look at what the best investors do with their money, they focus on specific metrics. If you gather all the investments from Warren Buffett, for example, you see that some metrics come again and again and again. And that's what we will do with this stock screener. So I'm here on FinChat, screener tab. What are the metrics you want to use? Screener criteria. Okay, so if you want to invest in strong companies that have a great chance to outperform the market, you want to invest in companies that are very efficient. How do you measure efficiency? You can measure the return on invested capital. So that's how I would do it. You put your ROIC at 10% minimum over the past 10 years. So you show some efficiency. It will remove all the cyclical companies, the oil majors, the marine transportation companies, the bad apples, the companies that are not very efficient. Okay, now you want to focus on EPS that is growing. Over the long term, stock prices follow earnings per share. So you want earnings per share to increase. And how can you see if the earnings per share for a company will increase? You check the past. The past is a very good indicator for the future. If a company has been great at getting more efficient and generating more earnings for the past 10 years, it's very likely that they will continue. If they are in a winning position with a moat, with a competitive advantage. This is not always the case, but on average, I would say that this is a very good indicator. You can say EPS will grow 10%. Okay. What else can you have? You can have revenue growth over the past 10 years. You can say you want revenue to have grown minimum 5%. And if I run my screener, you will see that I have hundreds of results. It's capped at 250 results for the moment. So we will be a little bit restrictive. No worries. If we only want to invest in the US, we will say this, and we will still have over 200 results. Now we have 232 results here. Now we will use the valuation metric. We will not get too complex about valuation. We can talk about the PE ratio. We can talk about the price to free cash flow. We can talk about the EV to free cash flow. I would say in this case, when we want to do our step 1 of the analysis of building the portfolio, let's check the price to free cash flow. Is it here? Yes, it's here. Okay, if you are a risky investor, you want a high risk, high reward investment, you can argue you can pay up for businesses. Or maybe you are a conservative investor and you don't want to pay an expensive price. Let's say if you have a maximum price to free cash flow of 25, how many results do we have? We have 100. So we can grid a little bit and look for PE, price to free cash flows at between 0 and 20. Okay. And now you have 80 results. Maybe you want to be more selective, more restrictive. What else can you do? You can check the earnings per share going up 10%. You have 59. You can add whatever you want. This is your own salad bowl. You can add a buyback metric. You can check if the management owns a significant share, so insider ownership. But I would say these are very good metrics for a hunting ground. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. And here I have 50 results. Okay, let's stop the screening exercise here, but just so you know, you can put up many metrics here depending on your style. If you want a company with a lot of assets, not a lot of assets, with high margins, low margins, you can take, for example, high gross margins for a software company, or low gross margins for equipment company. It depends on your style, but that's how I would do it, and I recommend that you use these key metrics to have a good hunting ground. So now we are talking about companies that grow revenue, grow earnings per share, and are efficient and are trading at a reasonable valuation. Price to free cash flow below 20, that's completely normal. And now that you have your list, what do you do? Now that becomes interesting. Out of 50 results, you have to ask 2 questions. 1, is this business inside your circle of competence? So do you understand the business? And 2, do you like it? So do you understand it and do you like it? For example, for applied materials, let me explain what I mean. For applied materials, I know it's a semis company, so semiconductor company, quite cyclical, so valuation may not be very efficient, very reflective, but I have analyzed applied materials a few years ago, so I know it's a great business. It's quite big. The market cap is $100 billion, quite big. Same thing with Lam Research, very similar business, and same ratios, a lot of efficiency. Now you have HCA Healthcare. I don't know anything about HCA Healthcare. What do? You open a private tab and you go to Guru Focus. You accept the cookies and you go to Guru Focus, to this website. This is my go-to website whenever I encounter a new business, and I really recommend that you use Guru Focus. Let me check my notes if I have forgotten something. I don't think so. The screener, the valuation, Guru Focus. And strangely enough, it doesn't work. Okay, it's working. And now, what do you see on Guru Focus? You see the market cap of the company. You see some charts. You see some metrics. You see the margins. You have a description of the business. Okay, it's a healthcare provider organization operating the largest collection of acute care hospitals in the US. Okay, very well. Rooms for hospital emergency rooms. Very well. And now you start to do the analysis. You start developing your accounting philosophy. What do you want to invest? Revenue is growing. Net income is growing. They have some debt. They have 40 billion of debt compared to a market cap of 80 billion. So the half of the business is in debt. They do some buybacks here and there. They produce some cash flow, and you have an efficiency that is quite stable over time. Okay, first, do you understand it? For the moment, it's in the healthcare industry, which I'm not very familiar with, so I don't really understand this kind of industry, this sector. And do I like it? It depends. It depends on your style, actually. For me, I like the buybacks. I like the growing revenue, growing net income. I don't like the debt at all, and I would prefer to see an improving ROIC over time. So I can find better. Let's say it's a pass. Okay, very well. Be a harsh grader, guys. And you continue. This one, Williams Sonoma, I know it very well. CDH, Atkore, Ulta Beauty, I know it very well. Interactive Broker, I know it very well. And you just continue. And let me stop and do another one. I have Atkore here. Ticker symbol is ATKR. So let's go to Guru Focus. ATKR. Okay, a market cap $3 billion. The stock has stumbled a little bit. It has crashed. Wow, 50%. I don't know what they do. Diversified industrial company and a manufacturer of electrical, mechanical, and safety infrastructure solutions. Okay, electrical safety infrastructure. Okay, quite simple to understand. Gross margins 30%. They have some strong margins. PE ratio of 7, forward PE ratio of 10. So we are talking about a cheap stock. And it seems like they enjoyed the post-pandemic. They generated a lot of free cash flow during these years. And what did they do with the cash flow? That's you to decide. They did some buybacks here. Wow, some heavy buybacks here. They have some debt. That is not an issue. They have a ROIC that is really up over here. So what happened in 2021, 2022 for this business? About the infrastructure in the US, what changed? I don't know. Is it in your circle of competence or not? And every person is different, every investor is different. But I guarantee that if you do this exercise of skimming through companies, selecting the best ones, maybe out of 50 companies, you will like 5. That's great. That's a great way to start your portfolio for 2025. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.